Ladies and gentlemen, Greg Mikulski from ForexLive.com. This is a Forex quick look. I'm going to take a look at two major currency pairs, the Aussie versus US dollar and the New Zealand versus US dollar in this video. So let's get started. Recall from yesterday, we were looking at this floor area right through here as a key level that we needed to get to and through, and we did, and we broke through that level and moved sharply to the downside in the Asian session yesterday. GDP was weaker than expected. That helped to propel the price lower, but we did get a snapback rally, and that rally took the price back above this yellow area, which was somewhat disappointing, but then rotated back to the downside, making new lows down to 0.664 level, nice round number, before the price started to rotate to the upside. I was just a little bit below that level. I lied a little bit, but then the price moved back higher, and in this time, the price held the resistance right near the high of the swing area at 0.64419. So the sellers are keeping the pressure on this pair as long as the price can remain below 0.64419. Today and going forward, the bias will remain more to the downside, and we can expect another rotation back toward the 0.6400 level. Let's take a look at the daily chart, see where that puts us in regard to the key levels off of the daily chart. If you look at the low prices from 2024, one was right here, that came in at 0.6347. The other one was right here, came in around 0.6363. Might add this low price right here at 0.63377. So 1, 2, 3 separate lows forming this floor here. That would be the target on the downside. Break below the low price near the 0.644 level. Move down toward the 37 to 63 area. The low prices from the I guess it's November 2024. April 2024, this is 2023, and August 2024. That's the look for the Aussie versus US dollar. So sellers are more in control in that currency pair. Let's take a look at the New Zealand versus US dollar on the hourly chart. And like the Aussie versus US dollar, we saw a break below a key swing area through here. In trading in the Asian session yesterday. Again, the Aussie's GDP data and the fall in that currency pair helped to propel that, the New Zealand lower as well. And in this case, the price did snap back higher, but the high price in here stalled within this swing area between 0.5859 and 0.5866. Rotation back to the downside and rotation back higher. And like the Aussie versus US dollar, came to the high of the swing area. And once again, it too found sellers against that level, pushed to the downside. We currently are trading just below the low of the swing area at 0.5856, below the low of the swing area at 0.5859. Like the Aussie versus US dollar, stay below the 67 level would be the best case scenario for sellers in this case, and we would expect further downside momentum maybe toward these lows right here, and then a low price for the month of November down at 0.5797. Alternatively, if the price does move back above the 0.5866 level, we have these cluster of moving averages that come into play, including the 200-hour moving average. That's a green line in this chart. The 100 bar moving average on the 4-hour chart, that's a step line right here, and then the 100-hour moving average right here. All those levels would need to be broken on the top side, in addition to getting above the 66 level right through here, to give the buyers even more confidence to the upside. So there you have it. A look at the Aussie versus US dollar and New Zealand versus US dollar. From a technical perspective, both are showing the sellers more in control with defined risk on the top side. We'll see how that plays out. My name is Greg Mikulski. Good fortune with your trading. Bye-bye now.